Well, good morning and welcome. You're watching Market Cafe on ET Now. I am Harsh Saita. With me is Snehi Shah. Over the next half hour or so, we'll take you through all that's happened in global markets, what are global cues looking like, as well as what stocks to watch out for in the Indian markets, as well as Indian announcements, if any. Let's quickly first have a look at how the global setup is playing out, Snehi. Definite positivity on the global market front. How's it looking?
Absolutely, Harsh. US, Europe, everywhere you see is a sea of green. So let's break down these markets and take them one at a time. And let's start with the handover coming in from Wall Street then. And stock futures were little changed in overnight trading as Wall Street looked ahead to Wednesday's producer price index data. US stocks rose on Tuesday after dovish comments by the Fed boosted declines in treasury yields, and stocks are coming off a winning session as treasury yields have eased from their recent highs, and Wall Street weighed the ripple effects from the Israel-Hamas war. The Dow has added 0.4%, S&P 500 gained almost 0.5%, and the Nasdaq has also jumped 0.1%. Meanwhile, the yield on the benchmark 10-year treasury yield nearly fell 13 bips to about 4.65%. And on the geopolitical front, then President Joe Biden condemned the Hamas attacks as terrorism in remarks that came on Tuesday and said that the United States stands with Israel. Now, Wall Street will get another clue into the state of inflation on Wednesday with September's producer price index report. Economists expect that the PPI has gained 0.3% last month, according to Dow Jones. In addition, minutes from the Fed Reserve's latest meeting due in the afternoon will offer further insight into the central bank's hiking cycle after it chose to skip an interest rate increase last month. Traders are also looking ahead to Thursday's consumer price index report for September. So while we're seeing slight bit of an uptick coming in from Wall Street, this is what the US markets were looking like. But let's shift focus to Europe because that's where all the major action was. European stock markets closed higher on Tuesday despite the ongoing conflict in Israel and Gaza. The Stock 600 index ended up with an uptick of 2%, reversing the pattern seen on Monday, with all sectors well in the green. Travel stocks climbed 4% despite the global uncertainty as airlines have cancelled flights to Israel, while mining stocks also rallied 3%. When we look at other indicators coming in from European markets, FTSE was up 1.8% and DAX was also up 2%. So, well, major uptick coming in when it comes to the European markets, Harsh. US also slight bit positivity, but well in the green when it comes to the European markets. But this is what equities did when it comes to the global handover. But Harsh, take us through crude and other commodities.
Well, yes, absolutely. So green on the equity front and crude not doing too much either. So what we are seeing on crude is there's a wait and watch mode, it seems, as traders are really looking for cues with regard to supply concerns coming through. Of course, demand is also being well assessed, but demand, it seems, is stable. Supply is really the concern at the moment, and we've seen crude prices go higher. We've seen the Brent at just below $88 a barrel. WTI is at $86 a barrel. So we're seeing a bit of flattishness with regard to crude, not much of a reaction. Where the dollar index is concerned, also largely we have stability there. 105.5 is where the dollar index is sitting at, and you're looking at bond yields also largely flat versus yesterday, 4.65%. In fact, absolutely flat versus yesterday, that particular number. And therefore, you're seeing gold also largely flat, around $1875 an ounce. So you're seeing commodities haven't made much of a move. That's a good thing because after 2 days of knee-jerk reaction, we are seeing commodities finally stabilize.
Absolutely, Harsh. With that, let's also take a look at all the important cues that you need to be keeping on your radar for today. And when it comes to global cues, then today the FOMC meet minutes will be released, so keep an eye out on that as well. When it comes to key events back home, well, we kickstart the Q2 earnings season with TCS kicking the season. You've got TCS earnings plus buyback happening today. Major moves to be expected in that stock, so keep an eye out for that also. When it comes to non-nifty earnings, you've got a slew of companies like Delta Corp, Signature Global, Zaggle, as well as Sami Hotels. They will also be declaring their Q2 numbers today, so keep an eye out for all of these stocks as well. And in terms of corporate action, then you've got Bank of Baroda that will be mulling a fundraise. Now remember, yesterday RBI has barred Bank of Baroda for the time being to onboard any new customers on its mobile app. So, well, on the basis of both of these cues, the fundraise as well as this cue coming in from the RBI, let's see what happens to Bank of Baroda today.
Well, absolutely. So there are several stocks which are in focus when we're looking at trade today. Let's get you the latest, though, on the geopolitics side of things. You're seeing Israel Hamas. US President Joe Biden has redoubled support for Israel as bombs continue to pound Gaza. The war has entered its fifth day now, and as many as 900 Palestinians have been killed in Gaza. The Israeli death count climbing to over 1,000 people. Hamas has continued to fire rockets at Israel, with Israeli forces and Lebanon-based Hezbollah fighters also exchanging fire. Hamas has, however, vehemently rejected the latest remarks from the US president, calling it a cover-up for Israel's crimes and terrorism against Palestine. The Palestinian group described Biden's latest comments as inflammatory.
Meanwhile, the European Union has issued a warning to Elon Musk over alleged disinformation about the Hamas attack on Israel, including fake news and repurposed old images. The commissioner responsible for the act wrote to Musk, urging him to ensure a prompt, accurate and complete response. We also spoke to Suresh Goyal, former ambassador on the Israel-Palestine conflict. Listen in to what he had to say.
See, the issue is that the Palestinian issue is not new. It has been there for more than several decades. It is more than 70 years old problem, 75 years old, began in 1948, but actually began in 1917 with the Balfour Declaration, where UK promised to create a country for the Jews from Europe in Arab lands. Now, I hope it comes to you the full import of what I'm saying. You are creating a country for one community in the land occupied by another community, displacing the other community and creating another problem. As we have seen before, Europe is very fond of creating problems and they will never stop at it really. So we have another problem in the Middle East created by Europe.
Right. That was his view on that. But let's quickly move on. Ground report from Israel. My colleague Pradeep from Times Network is at ground zero, listening to all that he has to say.
Ever since the conflict has started in Israel, it has only brought in death and destruction. Look at this damaged car. This car was damaged because of the rocket being fired from Gaza's side by Hamas terrorists. Many of these cars have been damaged. Right now I'm in Ashkelon area. Ashkelon is the heart of the conflict. We have seen that from day one, this area has been targeted by rockets being fired by Hamas. Let me show you. This is the place where from they are firing rockets. Even right now also you can see smoke billowing out. While I'm talking to you, you can hear the bang of this rocket explosion. Look at the condition of the car, how the splinter has almost pockmarked this car. The rocket came, it exploded here. Look at this. This is not the pipe. You must be thinking this is a pipe. This is basically a rocket. The missile, this is a heavy rocket that was being fired from the Gaza side by Hamas terrorists. They are trying to target civilians. They are basically trying to generate fear psychosis.
Well, that was the report from ground zero in Israel, but let's shift focus to the global economy then. And the IMF has reiterated the global growth forecast of 3% for the year and has cut its forecast for China and Eurozone and said the overall global growth remained low and uneven despite what it called the remarkable strength of the US economy. It also said US has seen stronger business investment and resilient consumption.
Right, let's switch over to India. IMF has raised India's growth forecast to 6.3% for FY24. This estimate is 20 basis points higher than the previous one. So from 6.1, they've revised it to 6.3. On the other hand, developed economies are expected to slow down to 1.5% in 2023 calendar year from 2.6% in 2022. It might fall even to 1.4% in 2024. Global inflation forecast is also expected to fall. 6.9% is what it's projected at in 2023 from the 8.7% number in 2022. Let's listen in to the chief economist of the IMF and what he had to say on India's growth.
It's actually India is one of the countries, one of the large emerging economies that has been doing better. than expected. It's been doing better for a while now, and we've mentioned that India is in fact one of the growth engines in the world economy at this point, and we're revising growth for the fiscal year to 6.3%. That's a 0.2 percentage point upward revision for this year. We're not changing our projections for next fiscal year. They remain at 6.3%, but that's a robust growth number, although it's still a slowdown, a little bit of a slowdown from last year.
Well, in other news, Minneapolis FED President Neel Kashkari sounds very optimistic. He says that they may not need to raise rates as much due to the recent spike in treasury yields.
Right, that will be key to watch out for. What the Fed does going forward will really determine where the 10-year bond yield rate is at. But of course, that needs to be assessed going forward. With that, we'll slip into a short break. We'll have Asian markets on the other side, so stay tuned.
Just close the
Back. Thanks for staying with us. We are watching Market Cafe on ET now, but we'll switch focus. Stock specific, IT bellwether TCS is in focus on the back of news flow around potential fifth buyback soon. My colleague Somi joins in with all of the details on that one. Somi, take it away.
Well, for TCS, if you see along with the earnings, buyback is one thing that investors would be keenly watching out for. Now, this will be the company's fifth buyback. In the last 4 buybacks, the amount was close to anywhere between 16 to 18,000 crore rupees, and the company has usually deployed nearly 1/3 of their cash on books at that time for the buyback purpose. Now, the buyback price at that time was at a premium of around 18% to the market price back then, and the retail acceptance ratio is one thing that one needs to watch out for. Now, for the first 3 buybacks that TCS had done, the retail acceptance ratio was close to around 100%. But in the last buyback that happened in 2022, the retail acceptance ratio, now that came down to just 24%. Now, if you see currently the company could have a cash of around 60,000 crore rupees on its book, assuming that 1/3 of this is used for buyback, the total buyback size could be anywhere could be close to 20,000 crore rupees. Now, assuming that the company buyback at a premium of around 18%, then the buyback price for of TCS could be anywhere between 4,300 to 4,400 rupees per share, which means that the company would buy back nearly 1.1% of the total capital. Now, but what's in it for retail shareholders? Now, if you see in the last buyback, the acceptance ratio had come down to nearly 24%. If that continues to remain the trend, even in this buyback, then the actual gain for any retail investor would be much lower, because even if we assume that the buyback is done at a 20% premium to the current market price, the retail acceptance ratio is just 25%, and the actual gain for any retail investor would be just 5% over a period of nearly 2 to 3 months. So retail investors might not gain much from TCS buyback if the acceptance ratio continues to remain on the lower side in the buyback.
All right, Somi, thanks for taking us through that. We will keep an eye out on TCS on that front as well. But TCS is also all set to kick off the earnings season, right? So which companies could see stellar profit growth this quarter, and which ones could see the maximum sequential profit decline? Somi, take us through all of that.
Called out this list from the Bloomberg terminal, and we have looking at companies which have at least 10 analysts covering the stock. So what we're understanding is Greenply is expected to report the highest sequential growth in the net profit, but this is largely because the Q1 numbers were impacted owing to maintenance shutdown, higher raw material prices and the Gabon impact, and also because of lower demand in the first quarter. Now, UPL will also see a good growth in their net profit in the second quarter on a sequential basis on the back of improving prices and improving demand supply scenario. When it comes to healthcare global, now that stock would benefit on the back of better revenue per bed, occupancy, and end of the one-time consultancy charges that the company had paid in the first quarter. Prince Pipe on the back of higher volumes and prices. Shobha would gain on the back of strong bookings and highest ever pre-sales number that it reported in the second quarter. When it comes to KC International, it would be the moderating raw prices and higher sales, which will aid the numbers of KC International in the second quarter of FY24. Apart from that, if you see the companies that could report the highest sequential drop when it comes to the net profit, in fact, there are two companies, Amber and Indigo, which are expected to report a loss in the second quarter from a profit that they had reported in the first quarter. Now, for Amber, it would be the fact that second quarter is seasonally weak, hence potential losses. For Indigo, it is weak air traffic, lower air ticket prices, and higher crude prices that would impact the numbers. For Sudarshan Chemicals, if you see, it is a weak demand coming in from paint, plastic and packaging, which would weigh on the company's volumes and hence its net profit could be lower. For cement companies like Nuvoco, Vistas and Shree Cement, it's the weak demand, lower cement prices and higher raw material costs that would impact the second quarter numbers. And for oil marketing companies like BPCL, HPCL and Indian Oil Corporation, it would be the weak gross refining margin when it comes to the refining business on a sequential basis, and also given the fact that because of higher crude prices, the marketing margins are also on the lower side, and two factors combined would lead to a sharp drop when it comes to the net profit of the oil marketing companies in the second quarter of FY24.
Right, thanks for that, Somit. Let's quickly move on though. We have IT Bellwether, TCS, going to kickstart Q2 earnings season. We'll switch back, focus on that one. What's the street really expecting? Anisha's here to break down the details on that one.
Well, yes, IT Bellwether TCS is going to kickstart the earnings season for Q2 FY24, but the expectations are fairly muted from the counter. We are working with the growth expectation of around 0.6% on the top line, both in terms of dollar revenue as well as the constant currency revenue as well. The rupee revenue is expected to be northwards of around 60,000 odd crores. That's where there would be a growth of around 1.3% there. Last quarter, that is in Q1, the company had taken the impact of wage hike for a large part of their employees. So on a sequential basis, there will be an improvement because in Q2, there will be productivity gains, efficiencies, as well as the lack of wage hikes. And that's the reason Q2 is expected to see a bit of a bump up as far as margin is concerned. By 30 to 50 basis point is what we are penciling in. The profitability, however, is expected to remain flat around at 11,100 crore thereabouts. Now, in terms of the other internals, deal bookings is something which would be very good for the company. Of course, in the quarter gone by, we have heard a slew of bookings that the company has done, whether it was BSNL or the tie-up coming in for Jaguar Land Rover and the other companies as well. So on account of that, expect the deal win momentum to be close to around $9 to $10 billion at least. And of course, the other things to watch out for will be if there's any further strategy change coming in. Headcount trend is one thing to watch out for. Over the last couple of quarters, we have seen a decline in the headcount. Whether that continues, there were reports that the company is shifting away from the hybrid model to completely from office. That is also something that the street would want more details on. Of course, the commentary in terms of how demand is panning out, is it incrementally positive or the status quo really remains? UK, America, BFSI are the key verticals. The updates on that will be important, and of course the all-important buyback, which is going to be one of the big talking points this earnings season for TCS. At least the street is working with a buyback of around 18,000 to 20,000 odd crore. Premium is expected between 15 to 20% if you go by the historic averages, but of course the acceptance ratio hasn't been that exciting for the retail shareholders. That's why we had seen tempered move after this announcement as well, but nonetheless this is something to watch out for.
Absolutely, Anisha. Thanks so much for taking us through that. Lots of factors to watch out for when it comes to TCS's second quarter results. But let's shift focus, and the Reserve Bank of India has directed Bank of Baroda to immediately halt the onboarding of new customers onto its BOB World mobile application. Meanwhile, the existing BOB World customers will not experience any disruption during this suspension. My colleague Ankur Mishra is joining in with more details on this. Ankur, take us through this. Why is this happening?
Yes, the Reserve Bank of India has put a restriction on Bank of Baroda's digital app, that is mobile banking app, and has directed that there should be suspension of onboarding new customers into app. And now this has been done due to material supervisory concerns which has been detailed by Reserve Bank of India. In fact, the order says that there has been problem while onboarding new customers, and the process needs to be checked properly, and until unless that process is not in place, the embargo will remain. Now we need to wait and see that what action bank takes on rectifying this problem. However, the order also says that there should not be any issues with the current customers which Bank of Baroda has on its mobile application, and this is only applicable to the new customers. Remember, this is the second lender after HDFC Bank to face such a suspension from Reserve Bank of India. Earlier, HDFC Bank had also faced similar kind of restriction, and that was due to digital outages which continued for the lender. Now we are waiting we are waiting response from the bank on what action the bank is going to take to satisfy Reserve Bank of India.
Right, thanks for that, Ankur. Bob, and focus on the back of that. But let's switch focus to macros. Government is looking at the possibility of surpassing their direct tax collections target for this fiscal. Out of the 18.2 lakh crore direct tax target for FY24, around 9.6 lakh crore rupees have already been collected. ET Now Sumit Chaturvedi caught up with the chairman of the CBDT, which is the Central Board of Direct Taxes, Nitin Gupta. Listen in to all that he had to say.
We have the target of 18.23 lakh crore is the target. We have achieved 9.57 lakh crore till date. So that is quite a nice one. And if I compare last year with this year, it is around 21.8%. So it's very comfortable as far as this is concerned. We are going to meet the target. Definitely.
Or surpass, is the possibility of surpassing that also?
Yes, definitely.
So, and apart from that, about the advanced tax collection, the numbers jumped 20% in the first half. Now, about the two tranches, the two more installments, what's the take?
That's what is around 20% jump was there in the second installment, and that is the overall thing is reflected, like as I've said, 21.8% is the growth, net collection growth rate as of now. So that advanced tax, once we get the December installment, we will be more clear about the trends and the collection trends.
But it looks robust because of the robustness of the economy.
Yes, economy is robust. Our taxpayers we are nudging the taxpayers to disclose correct income. AIS is helping them, as you might have yourself seen it. So all these factors are there. It's a better.
So advanced tax collection targets look better than first half, or
yes, like in corporate tax side, it was much better than the first quarter.
All right, with that, let's slip into a very short break on this edition of Market Cafe. But when we return, we'll look at all the stocks that could be potential buzzers in today's trading session. So stay tuned. Colleague Ashesha to take us through a list of all the stocks that could be potential buzzers in today's trading session and the ones that you should be keeping on your radar. Good morning, Ashesha. Take it away.
Hi, good morning. First up, let's talk about MCX, where the company has informed the exchanges that they will be going live with their new derivatives platform with effect from the coming Monday, which is the 16th of October. The company also said that this new platform will lead to significant cost savings for the company. So an important update has come in over there, and MCX will be in focus on the back of this news. Also keep an eye out on REC and PFC, and that is because RBI will be extending PCA supervisory norms to government-owned NBFCs with effect from October 2024, which is next year. So some relief coming in for both of these counters. Keep an eye out on them as well. Also, keep an eye out on Lakshmi Organics, and this is on the back of their fundraising plans, where the board has approved QIP. This is to the tune of 259 crores, where equity shares will be issued at the price of 269.2 rupees per share. ICICI Prudential Mutual Fund and Society General are some of the investors of this fundraise. So on the back of this fundraise, Lakshmi Organics will also be in focus today. Ugro Capital, meanwhile, on the back of its results, strong numbers the company has reported. AUM stood at 7,590 crores, which is an up of 12% on a quarter-on-quarter basis and 73% on a year-on-year basis. Gross loans, meanwhile, stood at 2,500 crores, up 51% on a year-on-year basis. On the back of strong Q2 FY24 results, Ugro Capital will also be in focus today. Meanwhile, Varun Beverages, on the back of some data that has come in, PepsiCo released its numbers and they've reported double-digit growth in beverage unit volumes in India, and hence this is a positive for PepsiCo. Keep an eye out on this counter as well. Lastly, on account of fundraising plans which the board of directors will consider today, KPI Green Energy and MedPlus Healthcare will also be in focus. Board of directors meet is scheduled to happen today to consider fundraising plans for both of these counters.
Thank you so much for that, Ashesha. Let's quickly switch over to Lisa as well. She's breaking down all the brokerage notes that have come through. Lisa, talk to us about the key ones there.
Well, yes, a very good morning. Starting with DAM Capital, they come out with a report on TVS Motors, and they have hiked the target price by more than 60%, maintaining a buy. They've hiked the target price to 3,051 per share from 1,875 earlier, and this is on the back of the structural export story, which is expected to recover. They expect strong rebound in the export volumes from second half onwards, and also a recovery in the volumes to be more than 30% and margin expansion ahead. So that was DAM Capital on TVS Motor. Moving on to Jefferies, even they have come out with a report on Suntech Realty. Maintaining a buy on the stock, they have hiked the target price to 555 from 415 earlier. So that comes to around more than 30% hike. And this is on the back of improved growth as well as governance prospects, and also the government's renewed focus on affordable segment. Now remember that Suntech's portfolio 75% is geared towards this segment, so growth is expected to accelerate because sales have lagged the ongoing housing boom. And lastly, HSBC has out with a report on Gujarat State Petronet. They have hiked the target price to 328 from 296, so that comes to around a 10% hike. And they say that it's a structural story on the higher gas consumption, where Gujarat State Petronet, they are the likely beneficiary of this long-term structural story. And they also say that the power sector is driving the near-term growth, and also the volume recovery is underway. They expect the volumes to be higher than the 30 million standard cubic meters in Q2. So that was all the brokerage, that was all what's on the brokerage radar, which investors have to keep an eye on today.
Thanks, Lisa, for all of that. We will be keeping an eye out on all of those stocks in today's trading session. Let's move on and listen in from a market voice then. And Vetri Subramaniam, the Chief Investment Officer at UTI AMC, is worried about valuations in the manufacturing space. Listen in to his outlook when it comes to manufacturing as well as IT and private banks.
I always worry about valuations because, we've seen this before when stocks do extremely well and they put up the valuations. What are they actually doing? They are actually discounting the earnings that, these companies can deliver in the future. And if you pull too much of that into the valuation, you actually depress your forward returns. So, that's my concern when we look at things like some of these manufacturing themes. Now, there could be one or two companies which still manage to pull it off. But when I see a generalized tendency for the whole sort of sector or an array of companies to start discounting a very rosy future, this to my mind has always been a precursor to the fact that future returns have been pulled into the present, and therefore the future returns actually get compromised. And those high valuations, go back, look at infrastructure 2007, even go back and look at how the IT sector was trading in 2020, 2021, when everybody said the whole world is tech. Look at the valuations they got, and then it's been a gradual descent down in terms of valuation. So that's my concern when we talk about this manufacturing opportunity. It may play out in the economy. I worry that the stock market has discounted it way too early. This is an area with multiple companies, all globally competitive in their right. We certainly like that area. But my approach toward this would actually come back to something you said earlier. I'd wait for those dips because these stocks having coming to up to 52-week highs is actually, to my mind, not making it to be a particularly attractive entry opportunity. My sense is that the macro commentary out of the US will continue to remain slightly challenged, particularly because our companies have a big exposure to the banking and financial services sector. And, if bad news comes along, I'll be happy if the stocks dip to go in and buy them. So long term, these are a brilliant set of companies, but I'd like to have valuation comfort before I get into them. So large banks have been disappointing, but I do think the top 5 or 6 lending institutions in this country, their incremental market share is now close to almost 2/3 of incremental deposits and loans. And I think that's the place I would be very happy to back.
Right, that was Vetri, of course, but quickly moving on with regard to what levels are looking like, this Wednesday morning, you're seeing the Nifty has climbed above that 50 DMA mark. It's above 19,650 now. There's some short covering that's been seen in the Nifty futures that's indicating a mild positive sentiment. And on the options front, we're seeing active call buying happening at 19,750 strike. And it's also indicating that traders are expecting the Nifty to go up further since that strike price has seen active call buying. Also, with regard to put writing, we've seen that at 19,600 levels. That's indicating that there's a good support there at 19,600 as well. What are FIIs up to? Well, in the index futures, they have around 2,700 long contracts, but they've even short covered. They've seen a cover of 4,800 short contracts, and so net to net looks slightly positive on that count. Also, with regard to index options, we're seeing call shorts of 58,000 contracts, indicating traders are less confident on the index not going up. Also, put shorts of around 2.3 lakh contracts, which indicates that traders are expecting the index not to fall majorly further. Also, largely, it seems, in summary, it seems like there are some bit of positive signs coming through. Chart-wise, Nifty needs to stay above that key 9,650 levels to continue to hold some positivity.
All right, let's see if Nifty continues to hold on to those 19,650 levels. But let's also shift focus to another market voice and then listen in from Saurabh Mukherjee. What's in his portfolio right now? And does he think the worst is over for IT? Hear out what he had to say.
Free ticket that I've heard of is gone. Not only are tickets gone, hotels are rammed, plane tickets are booked out. And I think this goes to show how wealthy a certain strata of Indian society has become. I would say not just the Indian upper middle class, but in general, in the big 10 cities of our country, levels of affluence and disposable income have reached close to first world levels, which is why you're seeing ticket prices which are comparable, I would say, to say a football World Cup held in the Western world. So heartening to see this level of affluence in India's big cities.
Absolutely. One has seen that affluence rub off on all the data points as well that we've been getting off late, be the property registrations, be the auto sales, all of it. You think this premiumization theme, Saurabh, is here to stay for a long? Because a faction of the market also believes that what you could bet on right now is the rural recovery, because they are the ones which have underperformed for the last over a year or so.
I think there are three underlying drivers of wealth for, I call it the octopus class, right? Roughly a million super rich individuals. Three underlying drivers. Firstly, obviously the stock market, right? The stock market's up nearly 18, 19x in the last 20 years. Anybody who's invested serious sums of money in the stock market over the last 20 years is on a rocket-propelled ship. Secondly, as the country networks, roads, airlines, broadband, the India stack, even small businesses who are competitive, small businesses in small town India are locking into the broader national economy. And it's very interesting that in our small and mid cap portfolios, some of the best companies are no longer in the big 4 or 5 metros, they're in the next 20, 30 cities. And the rise of an integrated national economy is driving an SME class. And the third aspect, I think, is the rise of what I call global capability centers. We have roughly 1,600 GCCs in India. These are companies and these are global companies, India offices.
All right, that's the word coming in from Saurabh Mukherjee, but let's also shift focus to some other news then. And the special investigation team formed to probe the 2022 Morbi Bridge collapse tragedy has submitted its final report in the Gujarat High Court. In its 5,000-page report, the panel said that the Oreva Group, which was tasked with the maintenance, repair and renovation of the bridge, is completely responsible for the tragedy. And Indian athletes have created history by achieving a record medal tally. Lauding their performances, PM Modi met the Indian athletes who have given many reasons to be proud of them. PM also congratulated the women athletes, saying they had done some amazing performances and accounted for half of the medals won by the 660-member contingent for the Asian Games. And Indian cinema's legendary superstar Amitabh Bachchan is celebrating his 81st birthday today. Big B chose to have a brief interaction with his fans who were gathered outside his residence Jalsa on this special occasion. His birthday will be marked with a special Kaun Banega Crorepati episode.
But with that, we're completely out of time in this edition of Market Cafe. From Snehi, myself, and everyone who puts the show together, thanks so much for watching The Market, to take all the action forward.